Alright, so today the market corrects, and there is no denying that we are now very close to critical support points. And the answer to whether the uptrend will continue or not will come very soon. And it all depends on how we react from here. So let us study the market as we always do, paying attention to the technical movements and identifying the main turning points in order to develop our strategies. Ladies and gentlemen, this is the Finance Hydra channel where you receive bias-free market analysis every single day. Every single day we cover many stocks and we always work with strategy. My name is Nathan and it is a pleasure to see you guys over here. Now let us start our analysis looking at the SPY ETF, which is correcting today. Alright, however, despite this correction, we are still in bullish territory. We are still maintaining the uptrend because so far we do not see lower highs, lower lows. We only see higher highs, higher lows, right? A classic trait of a bull trend. And of course, we are still above a critical support level made by first, the 21-day EMA, the exponential moving average, and the $600, the previous resistance level, now future support level. As long as we stay above this double support level, okay, the bullish bias will persist. No crystal clear technical evidence suggesting a reversal will materialize. As long as we stay above the support level, great. The trend will persist. However, I do agree that short-term wise, the situation is not pretty because, okay, we see a kind of congestion over here, right, on the daily chart. However, on the 1 hour chart, when we take a look at the short term, we see a possible symmetrical triangle chart pattern on the 1 hour chart. And right now, we are on the verge of losing the support line of this triangle. All right, and when we see this going on, usually it is an indicator of a bearish momentum ahead. Of course, medium term speaking, we are still above this double support level, so there is still hope. But seeing such bearish reaction on the 1 hour chart, especially after retesting this support level 3 times, all right, we retested this resistance level 3 times as well, and right now on the 4th time we see SPY losing this support level, only reinforcing the bearish momentum on the short term. So in order to avoid a sharper correction, it is extremely important for us to see the SPY making a very good, nearly miraculous reaction tomorrow or maybe in the next few days after the Fed meeting this week. So because we gotta maintain the price above this double support level. Nathan, what if we lose this double support level? What if we see the SPY turning bearish? Well, it is gonna turn bearish. In this case, we're gonna seek our next support levels. We could work with the 586, which is a crystal clear top level, now support level, another classic example of how the principle of polarity in technical analysis works. Previous top levels are going to work as future support levels and vice versa. And of course, on the weekly chart, we also see the 21-week EMA, which is right now is approaching the $580, which reinforces the idea that this entire area could be a technical support level for the SPY if we see it losing our major support level on the daily chart over here, this double support level. So again, the answer to if the trend will persist or not will come very soon, and it all depends on how the SPY will react from here. All right, now regarding the QQQ, this one is insanely bullish. Unlike the SPY, which is right now in a sideways congestion, short-term wise, the QQQ is not. It is extremely bullish, but Nathan, we are dropping today, right? We are dropping minus 0.60% the moment you are recording this video. Yes, we are. But this correction over here could be just another harmless pullback to the 21-hour EMA before the price continues its bullish momentum. Okay, so because this is what we have been doing so far, higher highs, higher lows, surfing above the 21-hour EMA. Okay, so the QQQ is still very bullish on the 1-hour chart, maintaining the uptrend on the daily chart as well. Now, Nathan, what's the key turning point for the QQQ that if we see it losing, if we see it missing this key point, it is going to convince you that the QQQ is going to turn bearish on the daily chart? We got this triple support area made by first 21-day EMA, second purple trend line, third 515. Okay, by losing these support levels, all right, the QQQ is going to probably trigger a sharper correction on the weekly chart. In this case, we could retest the $500 area again, which is very close to the weekly moving average. Okay, so it does make sense to see this scenario materializing. We have another interesting technical support level at 503, the previous top level, now support area for us, so which is also very close to the $500. So what's more, in addition to all of this, remember, the market has a thing for round numbers, so $500 is a psychological support level as well. So it all depends on how the QQQ is going to behave in this area. All right, so far there is no technical bearish evidence suggesting that we are gonna trigger a pullback or a sharper correction. Of course, if we see one, okay, fantastic. Any pullback to this triple support level could be just another buying opportunity. Similarly, if SPY makes any bullish reaction above this key point, fantastic. Probably another buying opportunity as well, because as I always tell you guys, buy near support levels. Okay, do not buy near resistance levels when the stock is already going up. This is crazy. Always buy near support levels because the risk reward ratio is always better near support levels. Second, if you see a bullish reaction around a support level, it is easier for you to manage risk. Okay, the risk will be less, while the potential outcome will be quite interesting for you. So again, we are in a bull trend. While we are in a bull trend, pullbacks are just buying opportunities. Very simple situation for the indices. Now, how this is gonna affect our stocks? Because as far as I'm aware, Nvidia is triggering this head and shoulders chart pattern on the daily chart. All right, and this is not good. It is not good at all. But Nathan, we see a bullish reaction today. Yes, we do. But according to Thomas Bukowski's studies, after the breakout of the neckline of a head and shoulders chart pattern, we see pullbacks roughly 66% of the time. So as far as I know, we could see Nvidia bouncing again all the way up, maybe even to the 21-day EMA. And that's it. The bearish sentiment will persist. What's more, we are still in bearish territory precisely because of the 21-day EMA. Excuse me. Guys, the 21-day EMA is an indicator that we use to track the trend. All right, it is not necessarily a magic indicator that it is gonna work as a crystal clear support or resistance level. No, it is gonna be just an indicator. And right now, if we see any pullback to this moving average, it could be just another resistance level for us, okay? Because we are the kind of traders that follow the trend, right? We are the kind of traders who consider the trend as our friend. So we are trend trackers. Any pullback to this possible resistance level, okay, fantastic. Could be just another selling opportunity for Nvidia. We gotta see a crystal clear, meaningful, bullish reversal chart structure on Nvidia right now, closing above all of its resistance levels, including the 21-day EMA, in order to convince me that we are gonna turn bullish again. Okay, for now, we are triggering this head and shoulders chart pattern. But Nathan, could we see a frustration of this head and shoulders? Yes, we could. This happens. It's rare, okay? The last time we saw this going on was on QQQ over here, right? Classic head and shoulders. It was completely frustrated. In this scenario, I told you guys, I don't like to short because we are still in an uptrend, okay? So when we see a bearish reversal, on the 1 hour chart, while the trend is still bullish on the daily chart, I only see as a possible pullback for us to buy near a support level. All right, and fortunately, we avoided this incredibly bear trap over here precisely because we have some patience and precisely because we work with strategy. Okay, so right now, if you ask me, Nvidia is more bearish than the QQQ because we are clearly in bearish territory on the daily chart, and any pullback to our resistance levels could be just another dead cat bounce. Nvidia is not looking good right now. We gotta see a better, clearer bullish chart structure in order to convince us that it is gonna turn very bullish again, that it could seek the all-time high again. For now, we see some stabilization below our support levels, which are right now our resistance levels, so the situation is not looking good. What's more, guys, I always tell you guys about the 21-day EMA. Guys, this moving average is part of my personal strategy. Okay, it is my strategy. It is my strategy. Some people ask me, Nathan, why don't you use the 50-period moving average or the 200-period moving average? Guys, let me explain to you again. Every single moving average works. Okay, every single one. Every single one. Let's take a look at our indicators over here. Say a number. Say any number. Let's say let me change the style of this moving average to yellow over here. Let's use this yellow moving average to exemplify our idea. We say this moving average. Say any number, 153. Okay, it works. As we can see here, it does work as a reliable support and resistance level. Okay, it does work over here. All right, say another number. Let's say 197. 197. It does work as well, right? Every single moving average will work. It feels like you are feeling a headache, and then you go to this drugstore. In this drugstore, you'll find many medicines, right? You'll find medicines for your stomach, for your eyes, for your hair. You see condoms. You see many kind of stuff. However, every single one of them will work. But since you are feeling a headache, you will seek for some pill for your headache. All right. This is the best analogy I can find right now from the top of my head. The 21-period moving average is just like that. It is part of my personal strategy, which you can have access, by the way, by joining our Telegram channel. Join the 5% Project, an educational project which is here to teach you guys how to trade correctly using a crystal clear strategy that can guide you through this market, regardless of what's going on. So in this Telegram channel, you'll find my personal exclusive ebook on technical analysis so you can learn. Therefore, if you are a beginner, you can start learning from us, reading this ebook while you learn on practice, because I share many trading strategies, many trading ideas in real time, all right? Every single time I explain in detail the entry point, the stop loss, the target, how to trade, how to buy. All right, so in our Telegram channel, you'll find many valuable information. So the link to my website is in this video's description. All right, now let's get back to our analysis over here. Tesla, this one is flying, exploding. If you ask me, $500 is our next technical resistance level. I'm so sorry I said technical. It is a psychological resistance level because, again, it is a round number. All right, it is a quite emblematic number, $500. This key point is going to be our next resistance level. Nathan, do you see any bearish evidence, any technical evidence suggesting that Tesla could possibly make a top signal from here? No, there is none. If you take a look at the daily chart, you only see another incredibly bullish candle, leaving a long shadow below the candlestick's body. And some people may say, but Nathan, this candlestick pattern has a name, right? It is a technical hanging man candlestick pattern, which is a famous pattern, which is a famous bearish pattern, right? Yes, you're right. However, studies reveal statistics say that this pattern, according to Thomas Bukowski's studies, says that this pattern is actually a bullish continuation roughly 60% of the time, if I recall correctly. Therefore, it is not a bearish candlestick pattern. It is another bullish candlestick pattern, because every single hanging man candlestick pattern is just a short-term pullback, a short-term approximation to the 21-hour EMA over here, right? We see a short-term pullback to the moving average on the 1-hour chart, and right now we are bouncing back up again, okay? Again, making higher highs, higher lows above the 21-hour EMA. The 21-hour EMA is pointing upwards along with the 21-day EMA as well. So we only see technical evidence pointing towards more bullish continuation, period. Okay? Period. Not a single bearish reaction. Now, AMD, this one looks particularly interesting because if you ask me, we could drop more. Okay, we could drop more to retest the 121, which is a technical support level for us. We are trying to react from here, yes we are, but we do not see any crystal clear technical buy signal yet. Maybe we will soon, right? Maybe the support level is going to hold the price, maybe not. If you ask me, if we see any bullish reaction on the semiconductor industry as a whole, we will see Nvidia bouncing as well, okay, recovering, trying to retest the 21-day EMA. In this scenario, we could see AMD again bouncing, retesting its 21-day EMA as well. But this is not gonna be enough to change the bearish bias seen on the daily chart. We are still very bearish. We are still in bearish territory. Could we see a bounce? Yes, we could, but we gotta be careful, okay? Knowing that any bounce could be just another dead cat bounce. We need to see AMD breaking all of these resistance levels, which were previous support level for us, right? The 132, the 133, and the 21-day EMA. Only by breaking this triple resistance area, I will be more convinced that AMD could fly again and seek higher levels. All right, for now, we gotta be careful, especially this week, because this week we have Federal Reserve meeting, right? So we gotta be very, very careful this week in particular. Now, Palantir. Palantir looks insanely powerful. It is just like MicroStrategy. We see Palantir holding above the moving average. We see a crystal clear support level around $71 and not a single technical evidence suggesting a breakout, suggesting that Palantir could reverse the bullish momentum. Only by losing the $71 along with the 21-day EMA, we could see Palantir making a real top signal on the weekly chart, suggesting a correction on the weekly chart, and any correction to the 21-week EMA could be totally acceptable and even plausible, possibly another buying opportunity, especially for the long term. All right, but right now we do not see any meaningful bearish reaction. Only by losing this double support level, we are gonna actually reverse the medium-term trend, triggering a long-term pullback on the weekly chart. All right, so far so good. We are still maintaining the uptrend, which reminds me, guys, so far you have been watching this video and you are not a subscriber, consider subscribing, because I'm here every single day talking about Palantir, MicroStrategy, Broadcom, Tesla, Nvidia, QQQ, SPY, etc. Every single day sharing unbiased analysis of the market. Every single time we study the market very, very thoroughly, right? Always paying attention to the technical evidence, and this is it. No bias. I'm not gonna try to make you guys euphoric or spread the panic here. Every single one of my analyses are totally unbiased, regardless of even my personal position, because you guys know that I have positions over here. For instance, Nvidia was very, very bullish over here for for a very long time. Right now we see Nvidia bearish. I am a long-term investor on Nvidia. I bought Nvidia in October 2020. So right now seeing this head and shoulders is quite problematic. It is quite frustrating, but I will always tell you guys what is happening right here, right now. I'm gonna tell you guys, I will analyze the market as it is. All right, I'm not gonna try to deceive anyone over here. I always try to do my best to deliver unbiased analysis. So maybe this channel is for you, right? So again, consider subscribing and click the like button, because your like is very good. It is very important. You give strength to this small, humble community. So again, join us over here. Click the like button. Now, MicroStrategy going up nicely. Okay, it's still above the 21-day EMA. It is still above our previous technical support level at $338, which we can update to this key support level right now, $356. Only by losing the 21-day EMA along with this support level, we could see MicroStrategy actually triggering a sharper correction ahead. But as long as you stay above both support levels, great. Fantastic. It is going to maintain the bullish bias, especially because Bitcoin is also insanely bullish, all right? So we don't see any meaningful technical catalyst suggesting that MicroStrategy can reverse its bullish bias. All right. In fact, seeing Bitcoin flying while MicroStrategy is still sideways, maybe this is an opportunity. All right. I'm not saying it is. I'm saying maybe to some people. Now, Broadcom is correcting today, approaching its 21-hour EMA. Seeing a short-term pullback is totally plausible. However, this could be a top signal only if we see Broadcom losing yesterday's low along with the 21-hour EMA. As long as we do not see this scenario materializing, fantastic. It is still an insanely uptrend. Of course, some people might get anxious because we are going up too much, too fast. So this gives us the impression that if we see correction, we could see a very sharp and intense correction. Well, we could, but bear in mind, the 21-day EMA is here to act as our next support level. And honestly, there is no technical evidence suggesting that we're going to correct right now. But it is very important for us to monitor these key support levels. 21-hour EMA, yesterday's low. Okay, watch for these key points for the next few days. And we see IWM, which is right now correcting. I did share a possible buying opportunity on this stock yesterday. I shared on our Telegram channel to the members of our Telegram channel. It did a very nice bullish engulfing candlestick pattern below the 21-day EMA. Fantastic. Any breakout of this candle's high along with the moving average could have triggered a very nice buying opportunity. But right now, by losing yesterday's low, by rejecting the idea of a bottom signal, there is no buy signal right now. Okay, not a single buy signal. It is not a buy, and in theory, we are supposed to retest our next technical support level, $227. Then, and only then, if we see a bullish reaction over here suggesting a bottom signal, we could see another buy on IWM, all right? We did a fantastic trade on this one over here, fantastic trade. We nailed this one, hit our target in a matter of 4 days, right? Fantastic trade, but right now we are trying to nail another good trade on this, but it is not easy, all right? It is not easy. This one is quite volatile right now, but if you ask me, we are gonna see another opportunity quite soon. Therefore, remember, join our Telegram channel, join the 5% project. You have 7 days for free just to test our service. You have absolutely nothing to lose. Guys, thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye-bye.